Hello, listeners. Welcome to another episode of Cognitive Dissidents. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Joining me for our weekly roundup is our chief investment officer, Rob Larity. Not a lot of housekeeping notes from me. If you haven't rated or reviewed the podcast, now is a great time to do so. It helps us immensely. Please share this podcast with all your friends, relatives, anybody you think might want to know more about geopolitics. If you have questions about the podcast, about cognitive investments, about anything else that's on your mind, you can email me at jacob@cognitive.investments. So without further ado, let's dive right in. Cheers. See you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. Rob, somehow we've made it through another week. It's all blending together to me right now, so it feels like we just had this conversation, but it's Thursday again.
Yeah, the inflation print was only 2 days ago. It feels like 3 weeks ago.
Yeah, listeners, I literally had to ask Rob before we started this podcast, did the market nosedive this week or last week? Because I couldn't remember which is a combination of not sleeping because of fatherhood, also being on the road this twice in the last week, which also sucks in terms of new fatherhood. And everything else that's happening geopolitically. But I guess let's start with the inflation print, Rob. Apparently July was not the peak, eh?
Apparently not. So here's what's happening. As everyone knows, the inflation print came in higher than expected. And how are markets reacting? Like the obvious headlines we won't get into because you can read the newspaper and see. I think it's more interesting to focus on what divergences are there. What are the little things that are not obvious? And there's a few things there. So the first is with the higher inflation print, interest rates and treasury yields at the short end of the curve have raced to new highs. So the 1-year US Treasury is now yielding almost 4%, which is up about 75 basis points in just a few weeks. So you're really getting a tightening there. But at the same time, the longer end of the curve is not making a new high. So 10-year treasuries, as I speak, are about 3.41, which is just below, the highs that they jumped to back in June. So there's this narrative that's growing that the economy is really much stronger than expected, that inflation is much more durable and driven by demand than expected. And yet the long end of the yield curve is not reflecting sort of interest rates higher for longer, as most of the interest rate focused guys think. So there was a piece in the Wall Street Journal today where one of the editorialists was essentially saying, well, markets are really stupid because they're way too, obviously the Fed is going to keep raising rates for a long time, and why aren't they getting the message? And, here we ascribe to the notion that markets are always very wise and tell us things that may not be obvious. And I think one of those things that we're hearing from Mr. Market is that, this ultimately might be resolving itself into a policy error, and that a lot of the inflation that's running through is not particularly durable, with some exceptions that we can talk about around labor and stuff like that. But the yield curve is one key thing. The other key thing is currencies. So very interestingly, the dollar has been moving generally in line with US interest rates. So as the Fed has gotten more and more hawkish and the short end of the yield curve has gone up and up, then the dollar has gone up against nearly everything. But as we said a few times now, most currencies bottomed against the dollar back in June, July I think it was July 15th that all the emerging market currencies bottomed for the most part. And even though you had this big inflation surprise, and even though you had, short-term treasury yields going through the roof, the dollar's not making new highs against most currencies. So the euro is not making a new low. The Hungarian forint is not making a new low. The Indian rupee is still not making a new low. And you can go on and on and on. In Brazil, all sorts of emerging and developed market currencies are hanging tough, which is a really interesting divergence from what we had seen before, because before, currencies were just getting pummeled over and over as interest rates were going up. So the currency markets are telling us something different. The bond markets are telling us something different. And the equity markets as well, because even though, the headlines on Monday were, oh my God, the NASDAQ was down 4%, the worst one-day decline since June of 2020. Well, June of 2020 was in the midst of a rip-roaring uptrend. and that's somewhat what we're experiencing now, because we've had a pretty significant pullback from what was a very powerful thrust out of kind of the trough of, I don't want to use the word trough, but the bottom of this bear market that we've been in. And we're still well off of those lows, which is really noteworthy, because, God, if everything was predicated on, inflation's temporary, interest rates are going to come down and that's going to buoy the market, then the equity market is not throwing in the towel on that narrative, despite the fact that everyone thinks inflation is obviously here to stay and interest rates are going to remain high for a very long time. So those divergences keep stacking up, which makes me continue to think, despite the inflation print and despite what people are saying, that I want to be long bonds and long equities and long foreign currencies rather than the opposite of those things.
Yeah, and especially the euro. Can I ask, at the risk of sounding dumb, a question, which is that, I mean, obviously interest rates affect inflation, and there's some kind of relationship there. But this idea that there is inflation and that it's only about what the Fed's going to do with interest rates, like, that's just not, like, there's so much more that goes into inflation than what the Fed is doing. And in some ways, like, yes, you can raise interest rates a little bit, but that's not going to help you if there's a fertilizer shortage, or if the market is structurally imbalanced when it comes to energy supply and it's ping-ponging back and forth. Like, it seems to me that the policy area there is thinking that interest rates is just the one tool that you have, and that you're actually somehow going to affect inflation with these things. And I, the more inflation enters the zeitgeist, the more I feel like everybody's focusing on interest rates and not focusing on all the different things that go into inflation. I mean, if you actually look at the inflation print, gasoline prices, I think, were down something. The gasoline index was down 10.6%, but the food index rose 0.8%. Used cars went down, sort of confusingly. Medical expenses and other things went up. So it just feels like there's a lot more complicated things happening beneath the surface there, and that's not what we're talking about. And it doesn't seem to be what the Fed is talking about either. So do you have a sense of, like, what exactly are they looking for? I've almost lost track of what they think they're looking for and what success is going to be defined as with its interest rate policy.
Well, I think you're making the mistake of speaking like a rational, intuitive human being instead of a market participant playing a very weird little specific game. Because you're totally right. Interest rates don't do anything about energy or food or a lot of these elements that are driving inflation higher, shortages, ships piling up in Long Beach, all of those things. And especially in Europe, the Fed is one thing. At least the Fed has a more legit basis for what they're doing, because there's clearly a labor inflation issue here in the United States. But that's not the case in Europe. So the ECB raising rates and sounding a more hawkish tone is kind of silly, because Europe is going into a recession, and they're not, other than trying to defend the value of the euro, which helps maintain a lid to some extent on prices. That's really all it does. But here in the U.S., I mean, you're totally right. I guess the traditional view would be that by raising interest rates, hopefully along multiple parts of the curve, that the Fed is compressing demand for interest rate sensitive stuff. So, the classic example is housing. Traditionally, housing is a leading indicator for the overall cycle, the business cycle.
Mm-hmm.
So it leads us in and it leads us out. And that's because it's so interest rate sensitive. So as we sit here today, the 30-year mortgage rate is now over 6%.
Mm-hmm.
And the volume of mortgage applications for new home purchases has now collapsed to the lowest level since 2015. Now, there's a supply issue that's, we can talk about separately, that's helping to slow the decline in prices. But housing prices, that's how you get them to go down, by squeezing people on mortgages. So that's the classic example. But then, traditionally, corporate CapEx, to the extent that it's driven by, debt costs, is said to, rise or fall based on interest rates. I don't know in practice, like looking at what businesses actually do, I don't really think that that's the case. But in the Fed's models and the way that they think about the world, that's the assumption, that you raise interest rates and all of a sudden, Amazon at the margin is not going to build that next warehouse and hire the workers and squeeze up labor costs. It doesn't really work that way, but that's the general idea.
Yeah, I guess I'm struggling also because if the U.S. government, and we're not talking about the Fed now, if we're talking about the Biden White House and what the White House wants to do to lower inflation, if you wanted to do that, yes, they're releasing oil from the strategic reserve. That's why the gasoline index has gone down. They've pulled that lever, but we went from them talking about taking down some of the Trump era tariffs to preemptive sanctions because of what happened in Taiwan last month. Like if you want to affect inflation, you probably want to improve things when it comes to China, at least in a temporary way in the short term. But if you're going to go after China now with sanctions, you're probably going to drive up inflation at that point too. So it also just seems to me like there's a disconnect between, the White House wants to lower inflation and is concerned about inflation, but then when you look at their actual foreign policy and the things that they're pursuing, like they're not actually doing things that are going to lower costs for the American consumer. And those are difficult choices. I'm not trying to say like what they should do. I mean, like it's very difficult, I think, to have the White House pick between, do we want to lower inflation? Do we want to deal with China and look strong with China? Like that's advanced level calculus right there. But I don't know. You mentioned labor wage growth. What did you think about the rail strike in the United States and the deal to avert it? So I saw that it looks like the unions are going to get a 24% wage increase over the next 5 years with an immediate payout of about 4.4% of annual wages. I mean, if we had woken up this morning and there was a rail strike, this podcast would probably be completely different. I don't know if we'd be talking about the economy tanking or inflation doing like doubling or whatever, but I don't know. Does the rail strike enter into, or the avoiding the rail strike, I should say, enter into your thinking at all when it comes to these things?
The rail strike is somewhat unique, because the railroads have been pursuing a very specific strategy that really has emerged out of the fact that they are monopolies, that have been increasingly acting over the last 10 or 12 years in concert. So in the past, we've spoken about this notion of precision scheduled railroading as the dominant philosophy that's taken over railroading over the last 10 years. And essentially, that's a monopolistic strategy. It's reducing service to squeeze your customers because they're screwed. They have no other choice. And running fewer trains that are at a higher capacity, higher utilization. And all of this connects to labor. So the labor forces of the railroads have also been on the receiving end of this squeeze. So if you look at railroad margins, like the EBITDA margins on the railroads are like 40% now, which is absolutely bananas. I mean, these are extraordinarily profitable businesses all of a sudden relative to where they were. Like if you look at the railroads, even in like the mid 90s, like they were a basket case, and then there was deregulation in I think 1980 or 1982, I forget exactly. And then, things really improved. But even relative to, the post-regulation norm, these railroad companies have been minting money. So like look at Union Pacific. Union Pacific used to trade at like 1.5 times revenues. And now the market values it at like 7 times revenues. It's like more than Google. Yeah, no exaggeration. Google trades at 5. So that's been something that's been brewing for a very long time. And the shippers themselves have been going after these railroads for this behavior. And now labor is really beginning to organize and get itself together. I don't see what the sort of what exactly they agreed in the deal, but this is unlikely to be a problem that gets better very quickly, specifically in the railroad sector.
Yeah, I ironically am struck by the notion that, if you had a bunch of government stimulus to improve U.S. rail infrastructure or build a high-speed rail network or do all these other things, I guess you would think that that would actually drive up inflation because it's more stimulus in the system. But part of me thinks that U.S. infrastructure has gotten so bad that the increased cost of shipping things within the United States might be driving up costs. And if you could actually put in new infrastructure, you would actually probably drive down the cost of shipping things, and you would drive down the time. And maybe ironically, stimulus would actually lead to lower costs. But
that's totally true. And that's already been happening. So for many, many years, we were in hock to the Western railroads because everything that was brought into the country came in through, for the most part, through the West Coast ports, especially Long Beach, Los Angeles, Oakland to a lesser extent. And they would be shipped cross-country on either BNSF or Union Pacific. Like they had a stranglehold over the whole business. And as that became more and more expensive and less reliable, you're seeing the infrastructure get built up even before any stimulus. So like look at the port of Savannah, for instance. Savannah has absolutely exploded in terms of volumes, in terms of warehouse infrastructure and transport infrastructure that's been built up around the port. The Panama Canal, I think in 2015 or 16 already, put in a significant widening of certain areas so that they could handle much larger ships. And that resulted in more volume going through Panama. So more volume ultimately making its way to the East Coast ports rather than just go directly to the West Coast. So you're seeing the market has already been responding to this. But yeah, any additional investment there would almost certainly be deflationary in the good way.
Yeah. Anything else on the U.S. market you want to hit, Rob, before we turn our gaze further afield?
No, why don't we head overseas because there's a lot going on.
Yep. Ukraine continues to make experts look bad. I can brag at being smart enough to say I just stopped making predictions about the Ukrainians 6 weeks ago because I had no idea what the heck was going on. So for the last 6 weeks, I look pretty good because I haven't said anything of substance about them. But man, this counteroffensive that the Ukrainians engaged in sort of over last weekend and into the beginning of this week, they've had incredible success. So it's happened along 2 axes. It's happened along the axis in eastern Ukraine, which is around Kharkiv. I'm probably going to butcher some pronunciation. So if there are Ukrainian or Russian speakers out there, I apologize in advance. All my language training is in Semitic languages, so I can pronounce Arabic sounding names, but these Russian Slavic names are a little difficult for me. And then the other axis coming out of the southeast, which hits Kherson province, and we've been writing in our global sit rep for a while that Kherson was really where the center of gravity was, because that's where Russia was sending all of their best troops. It looked like they were trying not only to consolidate gains, but even thinking that maybe they could push to Odessa and really take all of Ukraine's Black Sea ports and really control Ukrainian agricultural output if they could make it there. And the Ukrainians basically said, all right, well, they've taken their best troops out of out of Kharkiv and sent them to Kherson. We're going to hit them in both areas, but we're especially going to hit them in Kharkiv. And that's what they did. And they have gained an astronomical amount of territory back from the Russians and have put them on their heels. The Russians initially tried to deny that they had been defeated. And even yesterday, the state television had to come out and say, yeah, we took a big hit and we're sort of regrouping. So it's a pretty major change in the battlefield. And I guess the last thing I would tell listeners is that I'm not in the habit of praising the New York Times recently for journalism, but somebody did an article about what Zelensky's sort of decision-making process was around this thing. And it's a great example of the relationship between sort of the personal and the geopolitical, because I think a lot of times geopolitical downplays the role of the individual. But if this article is right about how Zelensky was the one pushing for this operation, and he was the one who felt this operation had to happen, because if it didn't happen, the Europeans wouldn't support the Ukrainians anymore, and maybe the Americans wouldn't give them weapons because it was going to be a frozen conflict and a stalemate. He was the one pushing for it, and even though his generals and American officials told him, you're going to get a lot of casualties, there's no guarantee of success, you're probably not going to succeed, and he was really the driving force saying, no, we have to do this because our situation's untenable if we don't. Man, it has me thinking about how different this conflict would be if Zelensky wasn't the president, if it was some other Ukrainian official who had ties to the old sort of political system. So there's a lot to unpack there, but it's been the most, I think, important week in the war since the first week when Russia started.
I was thinking, and maybe are there any historical examples where you've seen sort of an asymmetric conflict where the more guerrilla-style force has mounted a counterattack so successfully like this? Like, I struggle to think of one.
Yeah, so I had Simtak on the podcast, and we're releasing that episode Monday, and I threw up the example to him of the Israeli Defense Forces in 1948 and then in the early 1960s. And he pointed out to me, well, that wasn't really light guerrilla warfare like this. That was the Israelis managed to push back against the Arab forces because of the strength of their armored columns. They were using tanks in ways that people, in really effective ways that people hadn't expected. So that's not a great example. We could, try and go to, if we want to pick a more local example, the Soviets went into Afghanistan in the late 1970s. The United States was part of funding the Mujahideen, which eventually become, part of Al-Qaeda, or parts of the Mujahideen used the skills the Americans taught them to become Al-Qaeda and hit us 9/11 because time is a flat circle. The Soviets theoretically should have mopped up in Afghanistan, but they didn't, and that might have played a role in things going down. Vietnam, if we're in sort of the U.S. example, is maybe somewhere to go. So yeah, I think you have examples of that happening. But as Sim said in the podcast it's going to publish on Monday, there really is something remarkable at the fact that Ukraine's doing this with mostly light infantry. I mean, it's not tanks. It's not like they have an air force. It's like the United States gave them certain types of missiles, and they had a really, really good operational plan, and they just hit the Russians where they were weakest, and that's where it's going. So there's some similarities to different battles in the past, but the Ukrainians are also really doing their own thing. I think the last thing also to just say on that topic is, I think we had Andrei Sushentsov on this podcast, who's my Russian analyst friend, right back when the war started. And he described the war back in March as a civil war. And it is kind of a civil war. I mean, it might be more appropriate to think of this in terms of other civil conflicts rather than sort of global power conflicts, because for all the fear that other countries are going to get dragged in, nobody's really been dragged in beyond the United States and to a lesser extent the Europeans sending in weapons. So that's the best answer I can muster for you. Certainly not as successful an answer as the Ukrainian counteroffensive.
And before we started recording, we were talking about historical parallels in Russia, whether this was like 1904 when the Russians got involved in a war, got their noses very bloodied, and yet, were able, the Tsar's regime was able to continue, or whether it's like 1917 where the same thing happened and obviously it didn't. And I was thinking, as you're saying, do you think the poor performance of the Russian forces is just reflective more of poor tactics and strategy and execution? Or do you think that there's a morale issue that reflects something larger about what's happening in Russia more broadly, or a willingness to pursue this conflict or support for the people who are calling the shots, much like you saw in 1917, where there was very little enthusiasm for the Tsar. Morale was extremely low. Or is it just been that they've made bad decisions on the battlefield and bungled things?
We may get to the low morale position, but it doesn't appear to me that morale is low. If it was low, I think they would have taken a defeat or retreated long before this. I mean, remember the Russians, it seemed like they were trying to go for Kyiv and conquer the whole country, or at least decapitate the government at the beginning, and they failed, but they regrouped. They were able to sort of, regroup their forces, decide new goals that they wanted to achieve, and started attacking along those axes. So that showed me a force that, they made this critical mistake at the beginning from an intelligence perspective. They didn't understand that Ukraine and marching to Kyiv wasn't going to be a cakewalk. They overestimated their own abilities. They kept the news of the operation secret from even a lot of their top generals. So maybe a lot of the Russian forces weren't prepared for what was coming. But yeah, it doesn't seem to me there's a morale issue yet. But I say yet because, this is a different story now. I didn't really take it seriously when Zelensky a couple weeks ago on Ukraine's Independence Day gave this speech, this very rousing speech, where he said, we're not just going to go back and take what the Russians took from us this year. We're going to take back Donetsk and Luhansk and Crimea. We're not going to stop until we take back everything that Russia tried to take from us from 2014. If thousands of Russian soldiers are dying and the Russians have nothing to show for this, and Ukraine is knocking on the doorstep and taking back Crimea, you would think that there would be a morale problem, and that in Russia people would be looking at Putin and saying, you have a problem. And just to finish that thought, Putin should know this better than anyone, because Putin came to power in the late 1990s for two reasons: because the Russian economy was really sucking post Soviet collapse, and because the Russian army, like the first Chechen war, was a really bloody, grisly conflict that they didn't do very well in. So Putin sort of came in and said, I'm going to restore order to the country, and I'm going to make Russia a global power again. And up until February 2022, he'd achieved those goals. He restored order to the country, and Russia was a global power. If the Ukrainians spank the Russians back across the border, that's not a global power anymore. And I think you can already see that in what's happening in the Russian periphery. There's a little Azerbaijan-Armenia dust up this week with, almost 200 soldiers dead. I imagine the Azerbaijanis sort of pressed that, and I can't imagine they did that without the Turks saying so. There's a big Shanghai Cooperation Organization meeting this week. On his way there, Xi Jinping stopped in Kazakhstan and talked about what the great friendship between the Chinese and Kazakh nations. You might remember that Kazakhstan is where Xi first announced the Belt and Road Initiative. He's had Central Asia booked on his dartboard for quite some time. So when you start to piece it all together, it looks very, very bad for Russia. And that's where you get into the two historical metaphors you said, the 1904, 1905 metaphor and the 1917 metaphor. That's where Russia really got kicked in the teeth, and everything that Russia thought about itself didn't work anymore. So if I was Putin, I'd be really nervous about that. The last thing is, I'd say, and this is in the 1904, 1905 metaphor, that was, of course, Russia picked a fight with Japan. And that's an interesting one to talk about, because nobody thought Japan was going to win that war. Russia was the great European empire that was just going to, deal with another, Asian, unsophisticated, uncivilized country, and Japan kicked their asses. And that sort of is the point at which Japan becomes this Pacific empire until they get defeated in the context of World War II. I'm not saying Ukraine's about to go Japan on the world, but man, if Ukraine can engineer this kind of defeat of the Russian army, and let's say Olaf Scholz is serious about what he said last week in Germany about welcoming Ukraine into the European Union eventually. Are we talking about Ukraine emerging as this new kind of European power with renewed strength and vitality as a result of the war? That's part of the 1904-05 metaphor, not just what's going to happen in Russia internally, but what's going to happen to the country that Russia picked a fight with. Do they get some unintended benefit from it as well?
Yeah, but at that point, Japan was a much more advanced nation, relatively speaking, than Ukraine is today, as far as its capabilities and industrial prowess and things like that, right? They defeated the Russian fleet twice with their own fleet, which, talks about firepower more than just kind of, I know Ukraine has firepower that it's gotten from the EU, but it's not like they have this big industrial base where they can really, become a dominant industrial power. Is that not fair to them?
Well, I don't know. I mean, they obviously were the breadbasket of the Soviet Union in ways, and a lot of nuclear power, nuclear engineers in the Soviet Union came from Ukraine. I mean, Ukraine was a really important part of the Soviet Union. There's a reason the Russian Federation keeps looking towards Ukraine, because Russia feels incomplete without it, not just from a geopolitical, geographic perspective, but from an economic perspective too. You're taking away a major part of the Russian economy. So, but no, you're right. But Ukraine does have a lot of things going for it. Like I said, they are a major breadbasket. They do have a lot of human capital there. So if they can expel the Russians and they become a center for European investment, and if the war itself allows them to clear away some of the oligarchic influences in the economy, and they can become the next round. I mean, imagine German companies opening up, industrial production in Ukraine, building factories there and paying low-cost workers, and all the stimulus that's going to go into making them, think of what happened to Poland and Romania and Hungary and all these other countries as they were integrated into Western Europe post-Soviet collapse. Can you see a similar trajectory for Ukraine if they are going to get sort of worked in to the Western European framework, and the Russians can't do anything about it? We're talking 4 or 5 steps down the road, and a lot has to happen before we get there. But it's a possibility now. Whereas, even 2 months ago, if I had even said that, people would have said I'm insane. I mean, people might say I'm insane anyway. So I'm sure they will, actually.
And let me ask you a question. When you're analyzing issues like this, because it seems like people are pretty enthusiastic about the notion that Ukraine is going to win this war, whatever that really ends up looking like. And that's what a lot of people hope will happen, most people in the West. How do you separate hope from analysis? And do you think that we're being too sanguine, and that Russia has much more as far as reserve strength that it can bring to bear, and keep this going much longer than maybe the consensus now assumes?
Well, I might employ that time-honored Jewish tactic of answering a question with a question. But before I do that, I was listening to Marco, who's a guest on this podcast, frequently talk about this earlier this week. And, somebody asked him something like, the person he was in dialogue with talked about sort of, it would be nice if Ukraine won, and that would be good for Europe. And Marco made the point that I don't give a shit what happens to Ukraine. I'm here about trying to make money and for my investors and things like that. I think that really depends on the individual analyst. I am not someone who has ever been able to just be completely unemotional about the things that I'm analyzing. For me, I have to identify my emotions, compartmentalize them, put them in a bucket on the shelf, and then sort of analyze what's going on, but then have my emotions over there on the shelf. So for me, and I don't know, this is just how my brain works. Like, I can say it would be nice if Ukraine won, go put that on the shelf and actually look at the things that are going on the ground. Some people just have to be sort of that Marco approach where it's like, nope, I'm going to be vaguely sociopathic and I don't have any emotions and I'm just here kind of make money. So I don't think there's a one size fits all there. You do, though, have to disentangle your own, perceptions and wants and desires from the situation. But for me, that's actually more operative when it comes to thinking about the broader European Union in some ways than it is with the Ukraine-Russia conflict, because it seems to me that a unified European Union is a good thing for the world. And, disentangling that from whether the European Union is going to get together, whether that means good things from an investment perspective, that's one that I have a more difficult time disentangling. But you probably have to do this with investments too. I'm sure you've looked at companies before that you emotionally would have liked them to succeed, but it wasn't going to work. And I'm sure the opposite is true. I saw Starbucks was up this week because they're going to invest a lot of money in automation and shit like that. And this is why I'd be a bad short investor, because I taste Starbucks' coffee and I'm like, you better short that. That's the worst coffee I've ever had in my entire life. And now they want to spend $500 million in automation, like maybe get some better coffee beans. But I mean, how do you do that when you go at an investment or do you have that at all with an investment where there's a company you want to succeed, but it's obviously not, or vice versa? Like, how do you approach that?
On the long side, it's very tricky because everyone likes to invest in good quote unquote companies. And there's a whole industry that's emerged of people writing and on Twitter and talking about, oh, I love this company. They're just so well run. They have this great business. It's this competitive moat, blah, 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 blah. But the problem is it doesn't make it a good investment, because if everyone thinks that and realizes that, then you're not going to make any money if you buy the stock. And that's really hard to get over, the notion of what you pay versus what the company is.
Mm-hmm.
Because we want to feel good. This gets into the ESG issues as well. People want to feel like they're invested in good stuff. And that's a very deep human emotion. And we try to shut that down. It's easier in this case because we're not talking about, Ukrainians dying. We're talking about, I don't like Starbucks, or the moral implications are a little less profound, so it's a little easier to do.
Well, in the Starbucks example, I guess, but I mean, so I was in Fargo, North Dakota earlier this week speaking to the Northern Crop Institute with an audience of mainly farmers or agricultural producers and seed producers in North Dakota. And up there, when ESG came up, it was a dirty word. You could feel like everybody's back stiffen the moment anybody talked about ESG. And that's because farmers depend on fertilizer to produce food, and fertilizer has come under the target hairs of the ESG movement, because to create fertilizer, it's very energy intensive, and you need natural gas, and you need all these other things. And the thing is, if you're going to go after fertilizer production, you're going to decrease agricultural yields, and then people literally are going to starve. So when you actually start unpacking some of these things, like the Starbucks example, who cares? But if you start looking at fertilizer companies or some of these other things that we're looking at on a daily basis, it actually does translate into lives lost. Because sure, you can meet an ESG quota, but just be willing to accept that agricultural yields will drop X percent, and then you'll have a famine in Somalia and Ethiopia, which is literally happening right now. So,
investing is about emotion, and I think that's very much underestimated by the academics who say that markets are efficient. And it's not just positive emotion, because, my training is as a short seller. And I learned this over the years interacting with short sellers who tend to be a unique bunch, because their sin is not, being overly enthusiastic. It's being self-righteous.
Mm-hmm.
Because when you're a short seller and you find a company that is, they're failing or something's going wrong and they're trying to hide it, and they're massaging the numbers, and they're, acting all enthusiastic on the conference calls, or if they're committing fraud in an extreme case, you feel self-righteous about that. But it doesn't necessarily mean that investors are going to care, or the stock is going to go down, or what you hope will happen is going to happen. And in many ways, I think hate is more powerful than love. And it's more dangerous to be a short seller who goes on a quest with a chip on your shoulder than to be, the investor on the long side who really loves a company, and you're, going to overlook valuation and all sorts of discipline in order to buy it. And I've seen guys, I've seen guys ruin their firms because they went on a quest, on the short side, to say, oh, these are bad guys. They're committing fraud. They're doing bad things, and losing their objectivity because of the anger around that. So it works both ways, and people are very emotional on both sides.
Yeah, I'm like thinking of Don Quixote as you're talking about that. It's just, instead of tilting at windmills, you're tilting at the imaginal ideological enemy or something like that when you're trying to target the trade. But the flip side, though, and maybe this is a way to back into the conversation about Europe, and because you asked me, how do you think about Ukraine or having emotion about that? The other part of this is that emotions are a big part of understanding what's going to happen next. So, I mean, you sort of alluded to this. The Ukrainians are dependent on the Americans giving them weapons going forward, and the intelligence that they've been giving them on Russian arms depots and all these other things, and on the Europeans keeping on the pressure, especially in terms of energy sanctions on Russia. And that's an emotional question. So if you start your analysis by amputating your ability to see what you feel about the particular thing, then going and trying to understand how the average European feels or is going to feel in December when they get that energy bill, and are they willing to pay the energy bill, or do they want to support the Ukrainian cause, and what is the difference between them? Suddenly, you're not able to sort of engage with that. So not just investments are emotional, politics is emotional too. So one of the hard things I think with analysis is you have to be able to, like I said, compartmentalize it, put it on the shelf, put it away, and figure out what you think the structural and macro and non-emotional forces are telling you. But then when you get that variable, which in Ukraine's case is Europe going to continue supporting us with these energy sanctions, you probably have to take that thing off the shelf and figure out how you feel, and then try to put yourself in the shoes of Europeans and then in the shoes of the European leaders, and get to some stance on, well, do I think that Europe is going to support these energy sanctions going forward or not? Because when it comes to how we're positioning ourselves for going ahead when it comes to Europe, my view right now, and I'm going to re-examine this over the course of the next week because I feel so sure about it that means I know I need to review it, is that the Europeans will stick with the energy sanctions. I think that they emotionally have that same thing that you just sort of alluded to casually. Like, it would be good for Ukraine to win. It would be good if we were not dependent on Russian energy. My sense is that's what Europe's emotional state is. But to sort of, I think to hack into that emotional state, you have to be a little bit in tune with your emotions yourself. If you're not, then you're sort of missing part of it as well. Yeah.
There was an interview that I read recently with Gary Klein, who is a great psychologist. And as an aside, everyone reads Thinking Fast and Slow, which I think is overrated, frankly, at least for investment purposes. I'd encourage people to look into Gary Klein. I think he has a lot more to say that's actually useful for people like us. But in the interview, he was talking about some studies that had been done on people who had certain types of brain damage where their emotional connections had essentially been severed. And they were like little Mr. Spocks, just purely calculating. And the outcomes for these people were so terrible because they were unable to function in society. They didn't have empathy. They didn't have the emotional intelligence that you need. They lived very unhappy lives because they didn't have emotion. And I think emotion plays some crucial factor in our decision-making and analysis of what's going on in the world, as you point out, that I think shouldn't be underestimated.
Yeah, this is going to be the nerdiest moment in this podcast history thus far, and it might be the nerdiest we ever get on this podcast, because Spock, of course, is half human. Spock, of course, is half human, half Vulcan. So the reason Spock is so effective as a Starfleet officer is because he hides all the emotion beneath the surface. He's mostly logical, but then he can tap into how people are feeling, into his human side. What you're really talking about is little Sarix, Spock's lesser-known father, who was also very important in Star Trek lore. But I will stop embarrassing myself there and ask you, so based on all that, how are you feeling about Europe? I mean, I'm going to recheck all my work and next week put out a sort of revisiting my stance on Europe, because I feel more and more contrarian and more, bullish on Europe in general. I see when the euro drops below parity, it did a little bit this morning. I think it's back up already. I'm like, I will buy your below parity euros. That sounds nice to me. Where are you out on that right now?
I'm extremely bullish on Europe. And I was thinking about this from a sort of unique perspective this week, because I'm getting all excited because we're relocating, as you know, back to Paris in a month. So I've been rereading a lot of my favorite Paris-related books. So I reread A Movable Feast by Ernest Hemingway. And I am rereading now An Appetite for Paris by A.J. Liebling, who you may know was the famous New Yorker journalist, famously fat man who loved to eat. And I was thinking about this because I happened to read them back to back. And Hemingway was writing in the 1920s, which was obviously, this famous time to be in Europe, and all the Americans flock there. And you get Gertrude Stein and Hemingway and Ezra Pound and all these people, these famous figures. And Paris at that time was booming. And if you really read, why they were there, like Ernest Hemingway was poor as dirt, and he lived in Paris because it was cheap. And the franc was, 26 to the dollar. And you could go in and enjoy all of these great things that Paris, and to a greater extent, Europe, excels in, which is services, quality of life, food, all the things, we've mentioned many times. The tourism sector in Europe right now is booming. Remember last week, our friend in Berlin, everyone's out, everyone's eating, everyone's spending money. And again, like so the 1920s were a time when that loomed so large in our imagination. Paris, 1930s, you don't really think about France or Europe that much because that had changed and we weren't there. And then in the 1940s, after the war, that's when A.J. Liebling was there. Mm-hmm. And if you read, it's a wonderful book, by the way, I really recommend it. But it's basically him just describing all the stuff he eats for like 200 pages. And he was this journalist who had no money. And he would just have these like 8-course meals where he's, we started off with a dozen oysters, and then we would have trout in this sauce, and then we had 3 game birds, and then we had a pig that was stuffed with blah, blah, blah. And then we had, and this guy had no money and he was living like a king. And then that was another time when Europe and Paris loomed so large, and they were culturally so central to the world in the post-war period. And that was when Sartre was this, global figure. And anyway, this is a long-winded way of saying, like, that is the feeling that I get now when you look at how much it's booming there. The currency being at a low to the dollar, it's cheap to go there, and all of the advantages that they have are being emphasized by this pent-up demand for travel, by the ability of people with work from home and work remotely to go travel and be places more easily. I think all of these things are lining up to the benefit of Europe, especially continental Europe, in ways that are underestimated. And I think I would not be surprised if we saw like a true boom there in the next 5 years, despite energy shortages, despite short-term kind of problems, which are, they were dealing with similar things in the mid 1940s when A.J. Liebling was eating his 18-course meals. And then they went on to have, les Trente Glorieuses, the 30 years boom of investment, progress, enthusiasm, positive attitudes. We may be lining up for something similar now.
Yeah, I think the Russians think the Europeans are soft. They think that by jiggering around like energy flows and raising food prices, that the Europeans are just going to fold and they're eventually going to buy their natural gas from Russia. And I get the sense that that is the general prejudice against Europe, that everybody thinks they're soft, that they can't survive without their baguettes and their cheese and their wines and their all these things. And I don't think they're as soft as people think. I think when the chips are down, the Europeans can turn around on a dime. I'm stealing this point from Marco. Marco pointed out the euro's below where it was at the height of the European sovereign debt crisis, which was much more of a threat to the European Union than anything that's happening right now. People seem to think just because they're going to have these energy issues over the next couple months that they're not going to innovate their way out of it. They're already innovating their way out of it. They're already opening up new LNG terminals. They're already throwing, money at innovation in terms of renewables and things like that most other countries and regions don't have to right now because they're not right up against it. So all of those things tell me that as long as winter isn't some ridiculously cold winter, out of a statistical variation from what's the norm, and that's certainly possible, that they should be okay. I'm glad you said continental Europe, though, because the flip side of this, even as I feel good about Europe and the euro, I get more and more sort of pessimistic about the UK and the pound as things go on, because the UK is in the same position as a lot of Europe, but doesn't have the heft of the rest of the bloc. They're sort of on their own, and they're dealing with, Scotland and Northern Ireland not necessarily wanting to be a part of the bloc, and leadership at the top. It's, there's that. I forget who said this. Is it Marx that said history, repeats itself as farce? I mean, it feels like they had Churchill and Thatcher, and now they're getting Johnson and then Liz Truss, both of whom are modeling themselves on each other, pale imitations of these leaders that came before them. It kind of just feels to me like the UK is really wavering and doesn't have the same sort of level of innovation and strength that the European Union does. But no, I think people think Europe, I guess my takeaway after that long ramble is I think people think Europe is soft. And it doesn't seem to me that Europe is soft. Remember, these are the same countries that colonized very violently and imperialistically the world and created all of this technology, and so much capital is there. Like, I would underestimate them at your own peril.
I think whenever you hear sort of a cultural stereotype, you have to really assume that it's wrong, because you see these historically all the time when it comes to economics and that sort of thing. Like, if you were to go back to the 1950s or 60s, the widely held view among Americans was that Chinese people were lazy.
Yep.
Chinese people don't want to work. They're just layabouts. They don't do anything. And then 40 years later, it's, oh my God, these people are like Terminators. They're working in factories. They're kicking our ass. So I would speculate it's similar with the view of Europeans as these, silk-shirted weaklings.
No, that's a great point about China. That's part of the reason the U.S. got involved in the Korean War. I mean, Douglas MacArthur thought not just that the Chinese were lazy, but that they were cowards, that there was no way that they would stand up to the U.S. troops massing. They wanted to take over all the Korean peninsula, and they hit right back. So it's not just, when it actually gets into the hands of decision makers, those prejudices can really make you make wrong decisions. We're seeing it with Putin right now. Putin has been very, very smart. This goes back to our psychology conversation. He's been very, very smart strategically. I can't really think of a move that Putin has made wrong since he came to power in the late 90s. But this move is wrong. And it's wrong for a lot of different reasons. But I think the real reason it's wrong is because he underestimated the Ukrainian people's resolve, the Europeans' resolve. He just didn't quite get it. And he's really isolated Russia now in a way that I don't know how Russia's going to get out of it. I don't think natural gas is going to be enough to get people to forget everything that's happened the last 6 months.
It seems to be a recurring theme in Russian history, overestimating how easy a conflict is going to be and then getting smacked.
Yeah, although I guess you could say that of any great empire that starts to decline. You sort of have an overestimation of your own capabilities. Which again, I mean, this is why China is also interesting too. Like, everybody was afraid that China was going to invade Taiwan on the strength of Russia's invasion of Ukraine. I think the Chinese get that they're not strong enough yet. I would actually view it as a big negative for China if they started messing around in this particular way, because they can't do those things. And it seems to me that they still have a requisite level of caution and awareness of what's going on in the world that apparently the Russians didn't. And remember, this is not the first intelligence failure the Russians have suffered here. 2014 in Ukraine was a Russian intelligence failure. They didn't realize that the Ukrainians were going to rise up with a revolution. Georgia was also in some ways an intelligence and a military failure. Georgia was just so puny and small compared to Russia that they couldn't do much. But when you actually look at Russia's performance in that war, all the same problems Russia's having right now, they had them in 2008. I made the assumption that they fixed those problems because you thought that if your ground commanders are saying they can't communicate to the Air Force on secure lines and actually get air and ground forces to participate in an invasion or in an operation together, you would have thought that since 2008 they fixed it. They haven't fixed it. It's still really bad. So yeah, I don't know. Well, we're at the 52-minute mark, Rob. Do you want to close there for the listeners, or is there anything else on your mind you want to hit before we say goodbye?
We could talk about Brazil, or we could save that for next week.
I think let's save it for next week and just tantalize the listeners by saying, tell the listeners the Brazilian economic data that you saw that raised your eyebrow.
So the Brazilian economic activity data came out today, and Brazil is booming. Economic activity is at its highest level since 2013. Brazil's been in a 10-year kind of trough period after the peak of 2011, the commodity peak. And that's really worth noting, because I don't think that's the perception of what's happening in Brazil at all. I think a lot of people are looking at Brazil and saying that it's a basket case. So we can think more about that and talk about it in more depth next week. But there's hidden strengths in Brazil that appear to be emerging while everyone's focused on Bolsonaro and coups and all these sorts of issues.
Yeah, although, and this is the other teaser that I would add from the geopolitical side, which is it's actually relevant to talk about Bolsonaro for the first time in this election season, because in some of the polls, he's whittled down Lula's advantage. I'm looking at a poll right now, which is Lula 41%, Bolsonaro 37%. So, I mean, that's still a lead for Lula, and probably there's some other folks that would be voted for in the first round that I think predominantly would go for Lula. But as the Brazilian economy improves a little bit, you're starting to see Bolsonaro's poll numbers pick up. And I think that'll have ramifications too. But we'll leave that as the teaser, and we'll hit Brazil sort of next time. So with that, I'll get back to work. I've got some stuff to write. I'm sure you've got stuff to do too, Rob.
Back to the grindstone.
Sounds good. Cheers. Thank you so much for listening to the Cognitive Dissidents podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.